Ladies and gentlemen, I now take pleasure in inviting Shri Ashwini Kumar Tewari, Managing Director, State Bank of India, for his views on climate finance and corporate and infrastructure credit. Mr. Tewari is a career banker and started his career in SBI in the year 1991 as a probationary officer. He has spent more than 3 decades with the bank in India and abroad in various assignments. Presently, since November 23, he is the Managing Director of State Bank of India and a whole-time director handling the portfolio of large corporate and commercial credit business of the bank along with associate subsidiaries of the bank. Prior to this assignment, he was Managing Director, Risk, Compliance and Stressed Assets, where he was focusing on climate risk management in the bank and shaping the stressed asset strategy of the bank. Over to you, sir.
Good morning. Mr. Sameer Shukla, Joint Secretary DFS, Mr. Sunil Mehta, Chief Executive IBA, Mr. Raman, Chief Executive and MD SIDBI, Mr. Rashmi from Tewari and Mr. Purkastha. We only meet in seminars like this. So it's a real matter of privilege that I'm here again in IBA. And IBA has been at the forefront of actually spreading the awareness, as Mr. Mehta said, about the entire climate issue. Whether climate change is happening is not in doubt anymore. So there is no discussion about whether it's happening or not happening. Today's news, I think some of you might have read, it says this year is the hottest and every single year has been the hottest. And probably the temperature compared to 1852, which is considered as the pre-industrial era, is already 1.48 degrees, which was 1.5 the commitment of Paris, that we should ideally stay there. So this is not in doubt. And now the question is that how do we react to this? And especially in India, which is reckoned by many studies, India means South Asia, including the neighborhood of Pakistan and Bangladesh, are amongst the most vulnerable regions in the world as far as climate change is concerned. And we are already seeing this happening in different parts. We had a large flood in Pakistan earlier last year. And we have various landslides and hill events of glacial event in Sikkim and so on. So therefore, these things are already happening. So what I would do, considering the topic today and the fact that we have very good panels later on, there are 2 broad themes. One is the climate risk part, which I think may be covered subsequently by some panel, but that's more from the banks understanding the risk and how do you react to that, what mitigations can you put in. And also it's partly regulatory, where regulator is focused today on creating those scenarios which the banks should look at and then provide appropriately. So it's more like, okay, we are exposed, our portfolio is exposed to climate risk, and therefore we should provide for it so that if losses, if any, are covered. And there is an intermediate step of insurance which is expected to cover part of the loss. So I would not get into that. That's a big area by itself, and I think a lot of work needs to be done. Most of the banks do not have models as we speak in India about modeling the climate risk, and we are at a very early stage. And that part also includes the emission part, emission measurement. We have done some work, and I'm very happy to see Ankit here, who will be talking to you as part of some panel later, who has done it for us on a very high level. So what we found, again, that 27% of our portfolio contributes to 80% of the portfolio emission. And agriculture, again, not so surprisingly, 9% of the portfolio contributes 11% of the emission. So these are the broad numbers. Everything else, the P segment or the retail housing, etc., all of that combined, which is almost 40-45% of the portfolio, is hardly 6-7% of the emission. So this is important, but again, that leads us to the big question, which is today's topic of discussion, is how do we unlock climate finance? Now, there are different numbers. BCG is here, they have a different number. McKinsey has a different number, but these numbers range for India between 10 trillion till 2070 to 5 trillion. I think Shuklaji mentioned 3 trillion till 2028 or 2030, different numbers. But the important thing to remember is these are very, very large numbers. So just to set the context, and these are dollar numbers, so just to set the context, India's GDP is 2.8 or approaching 3 trillion. So if we have a 10 trillion number, which means almost 4 times our GDP. And the entire banking system's loan book today is around 150 lakh crores. So that again, if you consider we need multiple times of that loan book itself. So this is the extent of the problem we have. And how much has India attracted or invested in climate finance so far? There is a number, $21 billion. I again don't vouch for any veracity, but I can consider our own investment into this space, which is largely renewable and largely solar, that's around 40,000 crores. So if that be the case, then the requirement of a very large amount of finance, how do you get to that? So I would again break this down into 3 or 4 issues and how do we address each of those. The first issue is definitional. We still do not have a very clear definition of what constitutes green. So when we say green, is it just solar energy, or is it includes the module manufacturing, or does it include silicon wafer manufacturing, which is an input into the further EV chain, etc. So we need definition, that's the first thing. So there are some use cases as per the sovereign bond issuance by the Government of India last year, where it defined the uses of the bond for green purposes. So there is an indirect linkage as to these are the purposes given, so they can be called green. But that's an indirect way of looking at things. I think we need a committee or some group of government plus RBI plus SEBI plus the banks themselves to get together, sit together and decide which areas will be considered green and how. So is it to be linked to the emission or reduction of emission or energy efficiency? I think there is some challenge there to define green. That is the first thing. The second thing, of course, is that once we have defined green, and of course this needs to align with the international norms as well, how do you measure it? How do you measure the emissions? And then again, there are various methodologies, whether it is TCFD or GRI or anything else. And I was having a discussion yesterday, I think, with Ankit, and the important thing I asked him, because this question comes up, if we reduce the air pollution in Delhi or for any other large part of India, or if we reduce water pollution, does that constitute green or does it not constitute green? Again, there is no clear answer, and I'm told that the next set of definitionals which Europe is looking at includes biodiversity, water and air pollution and so on, but the rest of it today as it stands is not green. So TCFD is one part of it, which is largely about reduction of the carbon emissions. The rest of it will come under some other parameter. So I think there is a lot of confusion around this entire scenario about definitions and measurement methodologies. And that's all the more reason where bodies like IBA actually have to play a big role in getting everybody together and working with regulators, working with the government, and coming out with methodologies of measurement also, which could be an Indian way to measure, not necessarily just copying any external emission measurement methodology, simply because the Indian experience is different. We face a different set of challenges, and therefore, while we can always align and integrate or look at any other methodology available, we should look at our local factors as well. So that measurement part is the second part. The third part is the finance itself. Now, finance is, as we understand today, so far what we have attracted internationally, we always say, and there are numbers from Niti Aayog, that 1/3 of the finance needs to be external, at least 1/3. So if you take 10 trillion, there's an estimate of 3.5 or 3.3 trillion should come from external sources. That so far is almost nil. So we have been one of the fortunate banks which have attracted a lot of lines from World Bank and KfW and various other entities. These are for specific purposes, mostly for solar, but now recently one for green buildings, another for multiple use cases including vehicles, etc. But these are very small. So each line is maybe 200 million for 300 million kind of line. And then it is an expectation that we will invest from our side, maybe double that amount, etc. So we are getting somewhere. But what our conversation with all these entities is, please give us your technical expertise. That's more important. Rather than actually just having a line which is a set of money and which has an inherent issue of being in dollars, whereas we need it in rupees. And there is a hedging cost attached to it, and that prohibits us from actually bringing it into India and converting into rupees, because simply hedging cost is too high. And there is no solution to that yet. We have been taking up with all the multilaterals that please have a hedging mechanism, and you can build that cost into the whole cost. Otherwise, we just keep the line outside. It's a 20-year line, and we are using it for 5-year funding in our branches outside, which is very suboptimal use of long-term money like this. So therefore, equivalent amount, of course, we are supposed to spend in India. So this is one small portion. We are getting nowhere to the external funding requirement which is needed. And my sense is that it won't come just by being green. It has to be a attractive proposition, whether it's a bond or a loan by itself. So when we have launched a green bond or launched a green loan, the money has come in at rates. Incidentally, interestingly, 2 years back, we had to pay more for a green loan than the usual loan, because the use cases, etc., had to be defined clearly, and the external participants wanted more details, etc. So therefore, now, of course, it is all leveled, and it is largely the institution itself, the rating of the institution, the confidence institution, which attracts the money, whether it's green or otherwise. So we have not yet succeeded in attracting for green only, where people will be willing to pay a little bit premium. That's something which has not happened so far. And the RBI framework on green deposits, which came out last year in June, again, all the banks have created a policy, but I don't think any bank has attracted a significant amount of deposits. The reason is that no customer is willing to accept a lower interest rate on a deposit just because it is green. That awareness in the public at large has to be built up, that this is for a good purpose, so please accept a little less rate. That's not happened so far. And the compliance cost of these deposits is really high, because there have to be external audits and reporting requirements, which add to almost 20-25 basis points to these deposits, and therefore, to our dismay, this has not picked up. Now, what can be done about this? I think we have taken up with RBI, and this is a perennial topic of conversation, that we please give us some dispensation. Either you take out the CRR on these deposits, so at least we get some benefit, so that the cost of audit, etc., will be covered, and then we will probably try to either offer a little bit more, or at least market it as a usual regular deposit with an additional feel-good factor of a green deposit. I think that is how it's going to work, but that's a conversation which is ongoing. And since we are on the topic of regulatory thing, I think a lot of things in India, especially by banks, are driven by regulatory fiat in some cases and nudges in other cases. So the entire priority sector has been something which has really brought a lot of money into various segments. For example, microcredit, agriculture, and so on and so forth. Many of these have become commercially viable by themselves. For example, exports. But the initial nudge was important, and that's what the regulator did in conjunction with the government. And this is what we have been requesting RBI, that please do this with green also. Please expand the definition of priority sector for green finance. You can put a cap of maybe 8-10% to that adjusted net bank credit. But not having it there is no nudge. There is no incentive for any bank to actually go ahead and start investing into green. That's not happened. The next thing which I think I would want to talk about is that banks are not venture capitalists. So banks may not invest in very new technologies which are unproven, unless the industry itself is wanting to do that on their own and it is deemed as commercial. So for example, green hydrogen. Now there's a lot of conversation, there's a green mission around that, but the green hydrogen as of now in India is still $6 to a kg compared to $1 for a brown hydrogen. So we haven't found any large corporate industrial house who is willing to totally decarbonize the manufacturing vis-a-vis of hydrogen, which they use in a lot of processes, whether it's steel making, fertilizer making, etc. Many of them have set up small pilots, which we are happy to look at and happy to fund as well. But it hasn't taken off in a big way, and till that happens, till the cost comes down, which it will over time as technology matures, as more scale improves. So therefore, the initial push by projects like under PLI, I think they are very, very important, the mission projects. And once some of the larger scale ticket prices are set in, I think we will get there. Solar rooftop is another thing which we have taken up in a big way, and we are just about to launch a digital product, end-to-end digital, which will be offered to all our customers, and especially the housing loan customers, which they can simply press a couple of clicks and it will be credited to their account. And what we are trying to do there, apart from just funding, is also tying up with the suppliers on one side, which is many of them are listed on the Ministry of Rural Energy's website, renewable energy website, and they get a small subsidy on this solar rooftop. So we would like them to avail of that subsidy seamlessly once they get it done from those contractors. And on the other side, the bank is allowing this to happen. But while we work on this, and we know the example of Australia, where almost 35% of homes today, the standalone homes, have a solar rooftop. The problem they face now is not the solar rooftop. They don't want to expand it simply because it leads to so much fluctuation in the power, large spike upwards in the day when the solar is active, and it all comes down during the night. So now what they are doing is creating mini grids. Today we have a national grid, and we haven't looked at this problem from a renewable perspective in the detail which we should have. Creating mini grids where the solar or the wind, when the wind blows, is balanced by batteries in the interim. So suppose towards the night when the solar falls off, there has to be a battery which will come on and then link it to some other longer term sources. It could be thermal, it could be a pump hydro, etc. Now those are the kind of solutions which we'll come up against as this scales, because I'm very clear that solar rooftop is here to stay and will be a very, very important source of spreading rural, and also the banks are very happy to provide finance for it because it's small ticket, 2 to 5 lakhs. Generally, it can be bundled. Bundling is a wrong word, sorry, but it can be given alongside the housing loans. And I think it will be very useful once the people see the benefit of this. Our conversation, many of the state governments, today they are now willing to actually look at net metering. This was again an issue where the governments used to say that, okay, you can put excess supply into the grid at a price of 1 rupee, but we will give you power at 5 rupees. Now, obviously, that is not a very equitable way of handling these things, especially when we want to promote. And this is more applicable to the SMEs who have a larger area on the roof, etc., who can get a SME scale, factory scale solar. That's again something we are working on. So these are few of the things, and when we looked at this entire space in our bank, what we realized that this cannot happen in isolation. We cannot continue to do this as part of the usual business. Like Mr. Shukla was saying, it has to be focused. So therefore, we created a climate finance unit, and JC Paul, who's sitting here, heads that unit. And this unit exclusively looks at creating policies which have now been created around climate finance. How do we get liabilities around it? How do we deploy it in various assets? We have created a system of budgeting for operations on green. So the budgets are very, very nominal today, but they will increasingly go up, and we ourselves have a net ambition of getting to a net zero hopefully by 2055. We haven't declared that in public, and at 2030 for the bank as its own, which is scope 1 and 2. My sense is the bank will get to net zero in scope 1 and 2 by the next 2 years itself, because our footprint is very, very small already. So therefore, but the key thing is the portfolio. So on the portfolio, apart from measuring, what we are also doing is that we are talking to the larger corporates, and we will probably going forward in consultation with IBA. IBA can lead that, create working groups and also have workshops of sector specific, because industry won't be decarbonized by having a broad brush approach. So for example, if we have a workshop on thermal, because power is the most source of emission in India, 40% of our emission is because of power. So if we solve thermal in some way, and clearly the non-negotiable thing here is energy security. Nobody in India should be deprived of power usage, and as we develop the power demand and power usage will go up. So we need to continue with thermal for a long time. It's not going away. Now the question here is, what can we do with what is existing? While we may go more and more solar, more wind, more battery, more storage, pump hydro, etc., etc., but what do we do with the existing thermal plants? The answer is so obvious, and it's unfortunate that many of the external participants especially are not willing to discuss this. I have had this discussion with World Bank and everybody else. The answer is, how do we make it less polluting, less emitting? And there are very, very low-cost solutions around many of these technologies which can reduce the emission of particles of 10 or PM2, PM10, PM2.5 by investing there, and we are willing as a bank to support those kind of things. So FGD, which is for sulfur, is just one example. There are multiple similar examples of washeries on coal, etc., which can be easily implemented. So therefore, that's a conversation which we hope to drive from these sectoral workshops, which we will begin for power, for cement, for steel, and so on and so forth. We'll bring the leading players, bring the experts, bring those who have experience in decarbonizing or advising in decarbonizing together, start the conversation, and maybe arrive at some actionables. Maybe we not have a very large ambition, but even if smaller steps are taken to start, I think that gets a momentum of its own, and we can then take it forward. And the last thing I want to see, I think we need a national level campaign for many of these things. And one example surely comes to mind. I've earlier spoken about this also. The campaign in 2004-5 to transit from a tungsten bulb to a CFL. If you recall that campaign, There was the huge awareness driven around this. There was the supply side steps taken in terms of tying up with a lot of CFL manufacturers. There was an incentive given to not only CFL manufacturers, but also the pricing point of the CFL to the retail consumers. At the end of this, which took about 2 years and 3 years, today we have a tungsten bulb population which is less than 1%. So we did this in 2-3 years. So can we do the same with fans, energy efficient fans in all homes, air conditioning, including various the best energy efficient in air conditioning? As we drive this, we will find better models coming up all the time. Can we do this with geysers, with heaters, so many things. And since all this will be retail, it will be easy to actually drive a national campaign where people will be enthused to go ahead and do this. There will be a pickup by the manufacturers to be more energy efficient. There will be a pickup on the other side, and so on and so forth. In fact, there are so many examples. I mean, I was talking to a leading cement manufacturer, and they told me that they recycle or reuse 65% of the heat through multiple heat exchangers in the process. And I said, then you should call yourself green cement. Cement is one of the most polluting. And they liked the idea, and is this an idea we can take to other cement manufacturers perhaps? So these things, these answers hopefully will come from some of these workshops we will hold. So these are the things. I think the requirement is huge. The challenges are many, but if anybody can do it, it's India. We have done so many things. We have leapfrogged so many times. I don't think we have a challenge doing all this. It just needs a focused attention of all of us and taking it as a national priority, which has to be done. Thank you very much.
Thank you very much, sir, for sharing your views and some really thought-provoking ideas with us.